Okay, so for today's case study or this week's case study, I'm going to cover something that I think is very common, especially in the small business world, and going to be even more common as we have people, entrepreneurs who have started companies, ran them, been successful with them, and now plan to retire. They have a goal to retire. And of course, when you want to retire, you want to maximize that. You want to get as much money as you can from your company. And so, with that, there's a few things that you really need to think about when it comes to selling a company that makes it valuable to a future buyer or investor or venture capital company or, whatever it is. And so I call it the gem perspective. So when we think about building a business that's both successful today and attractive to a future buyer, we look through this perspective. And so GEM is an acronym, GEM. It stands for Growth, Enhancement, and Monetization. And so I want to talk through this because this is something important for anybody to think about, especially for anybody who owns your own company. If you want to sell your company, if you know that you want to exit and you want to exit, sometime in the near future, you need to start preparing 3 years in advance at a minimum. You need to start really, really thinking about what is going to make this attractive, what's going to optimize the value of the company and build it to where it is attractive and you can get top dollar for it, basically. And so, but even if you're just starting a company or you're currently running a company with no plans to sell, maybe someday down the road, still, this applies. Growth, enhancement, and monetization. So these are the things you need to think about when you're running a company in terms of structuring it to optimize it, to make it as valuable as possible. So if you ever want to exit, if you ever want to sell the company, you're going to optimize and get top dollar. So number one, growth strategies. So you want to always be focusing on expanding your customer base. So identifying low-hanging fruit. So what are some adjacent markets? What are some upsells that you could do with existing clients? Or are there some underserved segments that align with your mission or your product offering or service offering? The other, the second thing is re-engaging former clients to recover lost accounts. So this is a big thing. If someone's bought from you before, the likelihood of them, if they were happy, the likelihood of them buying again is very high. That's low-hanging fruit. You need to re-engage as best you can. Always focus on the re-engagement effort with former clients. Implement niche marketing to high value target customers. And so implement some unique offerings to your most valuable customers. Maybe this is going to be your high ticket offerings. Potentially if you're a service provider, or even offering some type of products, exclusive deals, things like that. And then leverage your referral partnerships. Think about, we live in today. Today is the age of strategic alliances. So the better you can partner with industry partners or channel affiliates that are aligned, with what you do, and create good referral networks, the more valuable it's going to make your company. It's going to expand your customer base. The other thing is increase your revenue per customer. So adding complementary revenue streams like onboarding fees, renewals, performance-based fees, any kind of product or service markups, optimal premium services, value-added offerings. So that could be things like subscriptions or bundles or warranties. You want to focus also on improving your client retention. So make sure that you not only have customers, but you have loyal customers. That builds huge value in a company. So that could be through securing long-term contracts or just delivering a very high-touch, high-value customer experience. And so expand your market presence, of course, again, partnerships, joint ventures, acquisitions, but expand into adjacent services, product lines, and verticals. So that includes things, those are some growth strategies. That's not all, but those are some of the big ones that really can help build value in any company. The second thing is your enhancement strategy. So it making the business as turnkey and sell ready as possible. Even today, even if you're not planning to sell today, always creating an operation, because this creates efficiency, and investors and future buyers want to see this. So clear standard operating procedures, workflows, that create efficiency, standardize operations, so ensure easy transitions to new owners. You want to build a scalable leadership team as well. So make sure that you have good leadership teams in place and reduction on you as the owner. The last thing you want to do is have the company very reliant on you. If someone's wanting to buy a company and they see that the success of the company relies a lot on you, that's going to reduce the value of your company. So empower your teams, build strong teams, and then begin succession planning early. Make sure you have a plan in place, not only a plan, but make sure you are implementing that plan and preparing the future leaders to transition with the company if you sell it. That builds huge value. Financial transparency, make sure you maintain clean books. You got to have at least 3 years of P&Ls. Make sure that you have that you document all your adjustments. So document owner-specific adjustments. So that's another thing that investors look for. If they see owner deductions, they like to factor that into the sale and into the future value or into the potential current value that they're willing to pay for a company. Categorize. Make sure that you have, you're very specific on how you categorize your revenues. For sure, all your verticals. Make sure you can clearly show each revenue vertical to show its value. And then show how many you have as well, and then your expenses consistently. You want to optimize your technology stacks. You want to streamline and automate as much as possible, improve your reporting and client tracking. So customer contracts and agreements, ensure that they're all enforceable and transferable. Again, long-term or acquisition supportive structures are the most value. You want to make sure that you have a good reputation, that your brand and your market position is strong. And then you make sure you highlight reviews, testimonials, recognition. Make sure it's understood that you are valued in your market. And then customer diversification. Not only is client and customer retention important, but diversifying. Broaden your customer mix to reduce dependence. You don't want to be dependent on any one single client or a handful of clients or specific segments. You want to make sure you're diversified very well. That builds value. And then avoid over concentration risk. That can highly devalue. If it creates what looks like a vulnerability, it's going to devalue your company greatly. The last is your monetization strategy. So focusing on your EBITDA growth. So buyers, they value EBITDA multiples, not just your top line revenues. So it's a great way to value a company by looking at your EBITDA multiples. So you want to prioritize your recurring revenue streams. You want to make sure you have lower churn rates and you have strong margins, operational margins. Identify your ideal buyers. So different buyers are going to want different things. And so you need to think about that. If there's certain buyers that you know are going to be interested in your company and going to want those, you need to structure everything to attract them. So, that could be like a strategic roll-up or a national regional player. They could be VCs. It could be private equity backed platforms. They're all going to want different things. They're all going to look for different things and value different things. So you need to make sure you're well educated on that and know what those are so you can better prepare yourself when it comes time to sell. And you want to make sure that you maintain a clean exit file. So make sure that you have a central location, a data room per se, where you can show where you can easily guide potential buyers to let them see everything they want to see all in one place. That just shows them that you're organized, that you know what you're doing, and that you're prepared. And that gives them confidence as they look into purchasing your company. It reduces friction and accelerates the due diligence phase, which oftentimes can drag, especially if you're very unorganized. The last is craft your strategic growth narrative. Craft your case for support. Make sure you have good communication. That might be a slide deck, maybe a narrative, but something that will say, hey, here's the market opportunity. Here's how we've grown. Here's how we've de-risked. Here's how we have captivated a market. And here's how you, the buyer, can scale this even further. You want to make sure that you have a story to tell that's going to build value, especially when it comes time to sell. So when you think about an operation, when you think about a company and you think about the future of it, of course, every small business owner ultimately will one day want to sell their company. That's why you build the company. A lot of times is to build that asset. This is how you can optimize and create increased and optimal value in your asset. I hope this helps. And I hope you can use it to build value in your company today.